The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Let's focus on what's going on locally. Beginning with our stock of the day, this is a stock that is making news. It is Telix Pharmaceuticals. The nuclear medicine company has hit its FY25 target with approximately $1.2 billion in unaudited revenue following a surge in demand for its prostate cancer diagnostic portfolio. Revenue up 46% in the fourth quarter to a record $322 million. Its flagship product, Illuccix, now controlling 55% of the Australian prostate cancer diagnostic tracer market. It's also announced China's regulator has accepted a new drug application for Illuccix, while the product has secured additional marketing authorizations across Europe. Now, Citi's saying that Telix's fourth quarter results did not provide any major surprises, adding that investors would instead focus on short-term milestones for the company's products, and Citi has kept its high-risk buy rating for Telix with a target price of $34 a share. Henry, what's your assessment?
Well, I have to say these target prices from some of the brokers are just cloud cuckoo land. Let's face it, the stock's at $10.84, and you would imagine that there are going to be price target changes in the months to come to reflect the reality, because the reality is messier than the analysts would have you believe. I think what is interesting, apart from the fact that Telix has disappointed and the stock is down 5.7% this morning, and it is trading on its lows that we've seen for quite some time, is not just Telix, but also we saw it with ARB yesterday, and Korea, which unfortunately I hold, with that disappointment. You know, we talk about the February reporting season, and it is important, but January is also important with quarterlies, and the reaction that we've seen so far to some of these quarterlies coming out in January have been quite extreme. So I would expect, you know, we talked about last August when we had a massive amount of volatility on stocks. I think February reporting season is going to be an absolute rerun of last August. And if you disappoint, you are going to get smashed. And Telix, for all the brokers that have got massively high price, I mean, Morgan Stanley's got a target of $25.60. I think, you know, we've got Canaccord Genuity, $28.50. I mean, come on, guys. Yeah, you're for real? I mean, let's face it. I mean, you're a long way away from reality. It was at the low end of guidance, below expectations. It did miss some of the bullish forecasts. Attention is turning to the pipeline. I mean, $804 million US is nothing to be sneezed at in terms of revenue, and it is, you know, it is a great product, and they are a good company. However, the price is telling you something, Andrew, and for my money, I would be averse to going near it just at the time being, especially, you know, high PE stocks generally around the globe are coming under some withering fire, and I don't think that's going to change, and I don't think the results have changed that at all, unless we get some sort of catalyst from some of the pipeline that's coming up. So that's going to be the interesting. But even the news the other day with the Chinese regulatory, that progress there, you know, that hardly moved the dial. It's going to take something really, really significant to move the dial on this one. So for the time being, I mean, if you've got it, you're probably a believer. It's a $3.7 billion company. But if you haven't got it, I think you just be, to be honest, I think this is going to be something that's going to be the theme of all the 10 stocks today. Maybe you're just going to have to be patient. Maybe the fog of war will clear by the end of this week and we can look at more high-risk stocks. But for the time being, I would just be patient on this one. Watch from the sidelines. It is a bit of a spectator sport in Telix, and watch for a turn or a catalyst. But at the moment, it's not getting my vote.
All right. Well, I'll call it a hold if you're there.
Yeah.
Okay, Andrew?
Yeah, look, it's a hold, Andrew, for all the reasons that Henry has eloquently enunciated just before. In particular, you know, this is confession season. This next week or so, we're in confession season, and then it's game on for February in profit reporting season. Henry is absolutely bang on. If you thought August was going to be ordinary, buckle up to February, because at least in August, we didn't have that geopolitical noise that we were just mentioning before. And in the case of Telix, the thing, all the reasons that Henry just spoke about, but the other thing I'd point out is that short interest, nearly 10% of this company is held short. So in other words, people are betting that the share price, and that is increasing, people are betting that the share price is going to fall. Now, on the basis of the result today, and therefore the share price falling away, potentially some of those shorts will start being unwound. People will stop increasing those bets. But when you see that short interest rising, you've got the CEO still selling shares, just meeting guidance, people averse to high PE companies. You stick all that in the melting pot, and at best, this is a hold.
A double hold then for our stock of the day, that is Telix Pharmaceuticals.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.